All right, everybody. Today, Paul and I are going to discuss why time is of the essence. Whether you're going through the application process, whether you're making a decision on pulling the trigger to get that policy or not, or you're just thinking about getting life insurance, period, or starting the infinite banking concept. Time is of the essence. What else have we talked about, Paul?
Well, I just say more broadly, and then I'll be quiet. You've been waiting long enough. Most of the people that find us, Dave, are in their 40s or 50s and do not have, permanent life insurance in force. So you've waited your whole adult life. So don't delay. The future's unknown. Don't be afraid to capitalize.
Couldn't have said it better myself. Hey, I'm Dave.
And I'm Paul.
And this is the Wealth Warehouse Podcast. All right. Well, Paul, looks like I feel like we were just talking last night. I think we were.
Yeah, we were. We had our third consecutive, was it third? Third, right?
Yeah.
Third consecutive monthly webinar for the Wealth Warehouse Podcast. Always somebody new attending, which is nice.
Yeah. There's always new names on there. Some, many, a lot of those I didn't recognize. So that's fun. It's good. So we'll continue doing that. We'll do another one in May. We'll probably have the link for that in the show notes here. So go ahead and register for that podcast or that webinar. Get it on your calendar. Bring your questions. It's good. We cover the gamut.
Yes, and bring some friends that you might introduce this to. If you're practicing IBC, or maybe you're in the underwriting process, or you're thinking about it, bring someone else that you've been talking to about it that might be interested. Like, who do you talk to about money the most? It could be your spouse, it could be a friend of yours, maybe a coworker. Introduce this to them and then bring them along. The more the merrier.
Yeah. I mean, it's such an easy thing to do because it's not like, you're putting them in front of us one-on-one for a sales pitch or something like that. I mean, we don't do sales pitches anyway.
No, we don't.
No. Yeah. So I'm not going to come accost you in the street like Ned from Groundhog Day.
Single premium whole life.
Oh, man. That would have been awesome before the IRS got involved.
It was right around that time, too.
I'd be doing a lot of single premium whole life.
Yeah.
Yeah. Personally. Well, all right. Well, man, let's talk about something you and I have encountered lately. Like a lot of the topics we bring up is what's been going on lately and what are the conversations we've been having with people. And something that is just really, I don't think we've stressed this enough throughout the episodes that we've done over the last few years, but time is of the essence. The most limited resource we have on this earth is time. The most limited resource you have during your day is time. Sometimes it feels like it's money. For me, sometimes it feels like it's patience is the most limited resource I have. But it really, when you think about it, time, I think everybody would agree, time's the most precious resource you have. It's one of those things. Have you ever said, I heard somebody bring up this analogy, like everybody knows who Warren Buffett is. One of the richest men in the world, worth multiple billions. That'd be awesome to be Warren Buffett, right? But would you, Paul, trade places with Warren Buffett right now? Would you?
What, and be like 95 years old?
Yes, exactly. Yeah, no, nobody would. No. Nobody this age, or even a little bit younger than Warren Buffett, probably zero people would say, yeah, I want to trade places with him, because you're giving up years and years and years of your life for that money. So if you think of it like that, it's pretty easy to see how time is way more valuable than money. Like the 50 years I have ahead of me that I'd be giving up are worth tens of billions of dollars.
Right. Yeah.
Because I wouldn't give them up.
I wouldn't want to all of a sudden be 95 years old.
Right. Yeah. So time is of the essence. So when we're talking time is of the essence, Paul, what are we referring to? It could be a couple different things.
Yeah, I think one thing it could be is A general indecisiveness about okay, about IBC in general, right? When you reach out to us, this is an education process, right, Dave? We've talked about it. That's why we have this podcast. So if I could add some, instruction, if you're just starting to listen, go back to episode 1. Get Nelson's book, Becoming Your Own Banker, 5th edition, hard copy, not the Audible. You can get the Audible, you can get the Kindle, but get this. This is your primary reference. If you don't like this book, there's several others, right? This was the first book that I read. I read this book as well later on.
For people who aren't watching, what books are you mentioning?
I'm sorry. Yeah, for you're not watching on YouTube. The Case for IBC, written in 2018, and How Privatized Banking Really Works, also put out by the NNI, written in 2012, I think, ish. Very good books. Gives you, talks about fractional reserve banking, talks a little bit about IBC and the problem, and incorporating it, combining it all together so you can understand what's going on, so that you'll know what to do. But anyway, getting back to the time thing, we've seen a little bit lately of, and I don't want to get into, talk about people being busy, whatever. I know what busy is. Dave knows what busy is. We get that. But if you've been approved for insurance, as an example, Dave, we're going to have a meeting about it, and we're going to talk about the final policy design, right? We're going to give you our best recommendation based on your circumstances on how this policy or policy should be designed for you.
Mm-hmm.
And then after that, there's a few days where you kind of mull things over maybe, or some people are just like, yep, I like it, let's go. And that's great. Everyone's a little bit different. But in the end, a decision needs to be made, right? And things can happen in between your making that decision or not making that decision. And we've seen it where somebody waited too long to make a decision, and I'm talking a matter of weeks. Something changed in their health.
Yep.
Right? They did have an offer on the table, but then it took so long for underwriting with this particular company that they had to go through basically another kind of screening process, and something else popped on their medical record, and now they're having to cough up more medical records. So it's just adding time to the process that was unnecessary, right? So anyway, financially, people have done the conventional thing by maxing out their Roth or maxing out their 401k, right? And they've done it not blindly, but they've just done it without any really the detailed explanations that they are asking on this side of things, the guaranteed side of things. So it's funny to me that, we put all this effort in and you're not, able to make a decision. Hey, this isn't going to cost you anything. Anyway, I'm kind of rambling, but
yeah. So, time is of the essence, like you mentioned during underwriting, which is why if you're going through underwriting, you need to respond to questions that come from underwriting, which come, I guess, through your agent asking you those questions to get an answer back to underwriting. Getting copies of medical records and all that, because you want it to go as quick as possible so that nothing happens between the time you start and the time you get approved and you get the offer. And then once you get the offer, time is of the essence. You should be ready to pull the trigger, make a decision. It's just a matter of what does the final policy design look like?
Right. Mindset wise, you should be ready to pay premium, and you should be ready to pay significant premium, right? That's what we're trying to do here. Pay significant premium relative to our income so that we can finance the things of life. Page 3. Pretty sure he says that.
Yeah, the intro.
Maybe. Anyway.
Yep.
That's what we're doing.
So what are some of the excuses we've heard over time? Whether it's somebody who decides not to go through the application process because they're not ready, or they go all the way through the process, get to the end, get an offer from the insurance company, and then they say, it's just not the right time for me. I can't tell you how many times I've heard from people that Just things have changed, and I don't think we're going to have the money to be able to do it now.
Sure.
That's one. And sure, there's bona fide emergencies that come up. And that's understandable. When you work with real estate investors, a lot of times they're like, well, I just put my money into a new deal, so I don't have cash anymore. 'Cause
I have no money.
They love
All my money
being
is
cash
locked
poor.
up in the walls of buildings. I have
Yeah.
no money.
I guess it's kind of like being cash poor as a real estate investor is a badge of honor, like being sleep deprived for an army officer. You just wear like a
Right.
badge of honor.
I never subscribed to that. I always thought that was bonkers.
Me too. That was the dumbest thing I ever heard.
Yeah.
But anyway, one of the other ones is, man, life is just crazy right now. We got all these kids. We got sports. It's all crazy. We got a baby we're expecting on the way. I just need things to settle down. Well, let me tell you, I've seen this meme. Adulthood is realizing, is thinking after this week, things will finally settle down just for the rest of
Yeah.
your life. That's what you say.
Nope.
And it never happens. Guess what?
No.
Never happens. And you're busy. We're busy. Everybody's busy. We get it.
Everybody's busy, and
Yeah.
that's great.
So
No, I think people who don't go forward, specifically in this process, whether it's pre-underwriting, post-underwriting, whatever, it's simply from a lack of understanding of the infinite banking concept. It's a lack of understanding of how the whole life insurance product, when used with IBC, really works and really enhances someone's overall financial picture, especially over the long duration. It's good in the short and medium term as well, but over the long duration, when you look at an entire family, it's phenomenal. And it's that lack of understanding, like, well, it takes 5 years for me to get the cash value, Paul, doesn't it? Well, no, where did you hear that? I never said that.
yeah.
Did you read that somewhere? I know Nelson has an example in the book where he says capitalize for 4 years. Well, that was just an example of that particular case. It's not how it's done necessarily. So that's basically what it is. If you don't move forward with practicing IBC at all, never mind through us, let's say, you don't understand IBC. The process is that good that it's worth implementing and incorporating it into your own personal life.
Yeah. With however much as you can manage at the time.
Right. That's right. You got to start somewhere.
You got to start somewhere. Yeah. So, I don't know how many times I've also heard the excuse, well, I'm going to wait to lose some weight and and try in 6 months, when I'm better, and then hopefully I'll get a better rating. What's the fallacy with that plan, Paul?
Well, the life insurance company really doesn't care that you acutely lost some weight over the last 90 days. What they do care about is sustained health improvement. So 12 months or greater, right? Because if you're a person who, was, grossly overweight, and all of a sudden you shed a bunch of that weight, let's say, 20%, 30% of your body weight because you needed to, well, that's in a short amount of time. That's not indicative to overall
lifestyle.
long-term.
Right.
It's just a snapshot in time. So they don't care. I always tell these people, and I've even told you, and maybe you're listening, like, you're not that bad. Honestly, your height and your weight, you're fine. And I'll even tell them, like, I've got people that are shorter than you that weigh the same that got standard.
Yeah.
Or that that got approved. So let's move forward. And let's face it, you're not gonna get in shape.
You're not going to do it. I mean, I hate to say that because some people, you should be motivated to get healthier.
Yes.
And I hope everybody does. But I've never had a single person give me that excuse and then come back 6 months later and say, hey, I lost 50 pounds. I'm ready to go. Let's do this. No, it was the excuse that they wanted to use at that time so they didn't have to just straight up say no. It's an excuse.
That's exactly right.
And chances are they're still in the same shape or maybe even worse. So that's one of the risks you take if you delay this because I'm not as healthy as I want to be. Great. Get life insurance now because guess what we can do a year from now? We can go back and try to get a better rating. Once you have a policy in force, a year later, if your conditions have improved, if you stop smoking, you stop using tobacco or nicotine, if you lost 50 pounds and you got your blood,
You stop smoking weed,
stop smoking the reefer,
the reefer.
and you got all your stuff under control, right? All the little indicators the company looks at. You got that at a healthy level. Let's go back through underwriting. The worst they can say is no, you have to keep the same rating you'll currently have. They're not going to drop your rating even lower. They can't do that. It's a contract. What they can do though is improve your rating. So I just had this with somebody who he needed more follow-up. They said, hey, we looked at his records. He doesn't have enough follow-up regarding this one particular issue.
Yep.
So he needs more follow-up. So he took a standard and over the next year is going to go get follow-up, maybe at least a couple times over the next year to get a clean bill of health for this particular issue. Then we have documentation we submit a year from now, and maybe he gets preferred. Great. But you already got the policy in force.
Yes. I have this maybe one or two clients, they really get hung up on being standard or whatever.
It would, I'll be honest, I would take offense if I didn't get the rating that I thought I deserved. But caveat that with the fact that, there's a reason you got that rating that you got. And it may have nothing to do with anything that's within your control.
Right. We encounter people that, I guess, I don't know, how do I say this? Through family history, kind of like Nelson talks about in the book, a poor selection of ancestors. He talks about his brother and the heart attack in the early 80s. His father died of the same condition. And some people just have, like he says in the book, a poor selection of ancestors, and you happen to inherit, maybe it's diabetes, maybe it's heart disease just runs rampant in your family. Maybe cancer runs in your family, whatever it may be. Some people don't have anything. Some people have a lot of stuff. Maybe it's Parkinson's, whatever it is. It's completely outside your control, which is why you should minimize underwriting. When you're born, you should own whole life. Your parents should own it on you, right?
Yep.
And some of you have had that. Okay, so want to move on to another excuse? I like this. I like this one.
Yeah.
All right.
What do you got?
We have an episode about this. Episode, I don't know, 15 or 18 or something about the mortgage. I'm trying to pay off the house, and we'll do this once we have more cash flow.
Ooh. Okay. So what you're telling me
This is a horse that's been beaten on this podcast, but we should continue and start hitting it again. Just
what you're saying is you're giving money back to the bank faster than they're asking for it in lieu of putting money into something for yourself, into something that you control and you can access, and you're building a separate asset that you completely own. That's the decision you're making. You're foregoing control of capital and future wealth by giving money to the bank faster than they ask for it.
right. And let's face it, if you've been a homeowner for several years and you haven't moved, you're likely, if you paid attention and refinanced in 2020, gotta yell at the dog real quick, and you refinanced in 2020, look at that, I picked right up where I left off. You're repaying a loan that's at 2.75 or 2.5 or 3%, whatever, 2.25 maybe.
Yeah.
And you're in a rush to pay that off, but you haven't thought about at what cost am I doing this, right? What am I sacrificing? You don't know what you're sacrificing because you're not even looking at other alternatives of what you could do. We have a podcast episode where we talk about the
episode 26 is where we really get into the 15-year versus the 30-year mortgage debate.
Yep.
And we show you, just even by the numbers.
The numbers. We show the numbers.
Makes way more sense at a 15-year.
30-year mortgage is way better, but if you have a 30-year mortgage and you're just making extra principal payments, throwing all or the majority of your excess cash flow against the principal of that mortgage payment, yes, you're saving interest. That's great. but you're also giving up the ability to earn interest. You're also giving up the ability to have flexibility in case something occurs. Like you have a 5-figure emergency, right? I'm sure the bank doesn't care that they're not going to give you those mortgage payments back because you're ahead of schedule. They don't care.
Yeah, they're definitely not going to give them back. If you're like,
No,
you know what? I gave you a lot extra last year that I didn't need to. I'm going to need that back.
no.
They're going to
That
laugh at
money is
you.
gone unless you refinance and cash out.
Yep, it's gone. And did that improve your life today? No. Will
No.
it'll improve your life when that house is completely paid off, perhaps, but it didn't improve your life in the meantime.
Right.
It
So
made things, it added risk to your life, really. You created more
it,
risk for yourself
it
financially.
adds risk, and it's something that for some reason people are and it must be because they're listening to just, I don't want to say the incorrect advice or wrong advice, but I think it's dangerous advice is how I have referred to it before, because you're not leaving a window to get out of. You've locked yourself in this room with no windows and you can't get out. Whereas, as we demonstrate in episode 26, where if you took the difference, like you're just making your normal mortgage payment, you could pay an extra $2,000 a month on that mortgage. Wouldn't it be better to keep that $2,000 in a place that you could get it? At some point, your mortgage balance and the balance of that separated account that you've been putting the extra money in are going to meet. And
Yep.
as Dan Sullivan would say, if you have enough cash to solve a problem, you don't have a problem.
Right.
But guess
So
what?
then maybe by that point, you look at having that mortgage as not a problem anymore. No,
Right.
because you've got the cash to pay it off. So who cares?
Liquidity is power. Liquidity is flexibility. And the other thing is that this other intangible is that liquidity equals opportunity. Whether that's an opportunity that you can just finance a medical emergency or some other emergency or an investment opportunity, whatever it may be. If you don't have the cash, you're not even looking.
Yeah. All right. So let's get to why we think waiting on this is the wrong answer. There's a few big ones. I think the obvious one, when we're talking about life insurance, the
Yeah.
obvious one is we don't know what's going to happen tomorrow. Are you going to
No.
get hit by the proverbial bus full of nuns tomorrow and you're a goner? We don't know. Are you going to come down with a disease? Are you going to have, discover, AFib or high blood pressure or anxiety or something that knocks you out of contention for a policy altogether? I'm not saying those things do. I'm just saying a combination of many things could,
Sure.
or something serious enough. Like you don't know what's going to happen tomorrow.
The
Are
future
you
is unknown.
right? Are you 100% sure you're going to be insurable 6 months from now? If so, then okay, wait 6 months. But I don't think anybody can say with certainty that, yes, I know I will be insurable 6 months from now or even alive 6 months from now.
No.
So that's the biggest reason.
Right. And again, if you're worried, if the IBC message hasn't clicked in your brain yet, that's okay. You should then buy convertible term life insurance. Put that in force. You need it anyway. You need the death benefit whether you know it or not. I know you think that you're going to be able to live off your investments and that you'll just leave your child the house or children the house or whatever. But look around. That doesn't happen all the time. If this plan has a bunch of ifs, if this, if that, if this, if that, well, you don't really have a solid plan. It's kind of a squishy foundation, I would say. You want to put some, you want to reinforce the foundation with something solid.
Yep.
Anyway.
Another reason is you're probably not going to be healthier 6 months or a year from now than you are today. I mean, just playing the odds, if you want to play statistics, you're not going to be healthier. You're going to be less healthier. Oh, and you're going to be older, which means you're going to get less death benefit for the same premium dollar.
That's right.
Every year,
just gonna,
you get closer and closer mortality,
yeah,
and
that
life insurance, death benefit costs more.
costs more. Yep. Okay,
But
what else we got?
well, I think the biggest thing though is if you don't, because what is infinite banking all about? It's all about changing the way you think,
The way you
rethinking,
think.
rethinking your thinking. Like Nelson
Yes.
says, time and time and time again. So a lot of people want to say, well, I want to kind of get out of, I want to pay off my debt, get out of this current system or, this current situation I'm in. And once things settle down financially, I'll reattack this. I'll come back around and then I'll start it. Well, IBC is about a different way of thinking. So if you don't start thinking differently, what makes you think you're going to be in a different position a year from now? Are you in a different position today than you were 1 year ago? If not, is it perhaps because you haven't done anything different with the way you think about money and the way you
Right.
think about banking and taking over the banking function in your life? Why would you want to delay that?
Well, I wouldn't. And I didn't.
Yeah.
This came up yesterday when at the end of the webinar, I kind of posed a question to the group of, when you first started your IBC journey, did you view your premiums as a bill, as a cost, as a necessary expense, or a necessary evil that you just had to? And people, a couple people spoke up. You spoke up. I wanted to add that, and I didn't get to that. I also, when I didn't have this particular product and didn't know about the infinite banking concept and how to really strategically use whole life insurance to create my own financing system or family banking system, I used to think of my life insurance premiums as a bill. And I think it's a very normal way to think about it. But now it's the complete opposite. Like I pay whatever 10 premiums throughout the year at different times. I can't wait to fund those policies. Each and every year I get, and they get better every single year. So it's even more exciting every single year to pay the premium.
Mm-hmm.
That's tough for someone new in the process to feel. They're not going to feel it yet. Like if you're in the first year, you don't know that yet. You just made one premium. But I'm telling you, every year that goes by, you're going to feel better and better and better. But again, for a prospective client or someone that's just exploring this, you're not going to have that same level of understanding about IBC. And you're going to think of this as just another expense. Even though we've shown you, we're using money you already have. It's not costing you. This is just moving your savings, let's say, from one savings vehicle to another savings vehicle.
Yeah. That's
all essentially what we're doing.
That's a pretty simple way to look at it.
Yeah.
You're moving it from one place to another.
No new money.
If you're saving money right now, which everybody, should be, you got to have emergency savings. You got to have that rainy day fund. You got to have the new car fund, vacation fund, education fund, all that stuff. Right? So if you're planning for that and you're able to save a certain percentage of your income every month or every year, it's just a matter of where are you putting it.
Yeah. And I'm willing to bet that 99.9% of you listening who do not own whole life insurance, you do not have a savings vehicle that you can access without interrupting the growth of that savings vehicle. You don't.
If you're getting any growth in your savings vehicle at all.
Right.
To
You're
begin
not
with.
getting much. Right.
Right. But imagine being able to use that money and still earn on it at the exact same time as if you never touched it. I mean, that's the power of properly designed dividend paying whole life insurance.
Yep. Long duration, right? Uninterrupted earning of that vehicle, of that whole life policy, right, over the long duration. It's going to it looks fantastic. So I think, again, if you have objections, that's good. You're exploring this, but make sure you get them answered. Make sure before you make a decision that you really understand all the ins and outs, because don't make assumptions based on what you might read or hear Dave Ramsey say, or because they're not correct, obviously. But make sure you ask the tough questions, and we'll answer them.
Yeah.
If there is a downside, which we have an episode on that, you have a temporary loss of liquidity.
Yep.
Partial loss of loss
yeah.
of liquidity. Right.
Right. Yeah. So bring the tough questions, and a great place to bring them would actually be the next webinar. So check the show notes, register for the webinar. And yeah, we'll see you in May. Bring your questions, and we'd love to answer them live in front of everybody else. So
For sure.
we're
Love doing
completely
it.
fine with that. Yeah.
Especially Stephen Clark's.
Yeah. He's always got good ones.
Good questions.
Yeah. Keep them coming. All right. Well, cool. I think that's good. So time is of the essence. There's really no reason to wait.
Yeah. Stop waiting. You've been waiting. You're in your 40s probably, or 50s. You've been waiting 30 years anyway.
Yeah.
You know?
Right.
You've waited long enough.
Yeah. If there's something we hear all the time, it's, man, I wish I would have learned about this 20 years ago.
Yeah.
So don't be one of those people. Don't be one of those people I talk to who are like, yeah, somebody mentioned this to me about 5 years ago, and I bought the book, and then I didn't really think about it, and then just recently I got reminded about it, so I'm digging in again. I wish I would have started it 5 years ago when somebody told me about it.
Yep.
Yeah, because time's the most valuable thing we have.
Yep. And this is one of the few things that gets better with age.
Guaranteed.
Yeah. Guaranteed.
Guaranteed.
No matter
All right. Yep. All right, everybody. Well, hey, have a good week. And again, register for that webinar. And we'll see you guys next week. Until then, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle in a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.